Good evening, George Will here. Breaking news tonight. The Internal Revenue Service has launched a comprehensive audit of the Archewell Foundation, the charitable organization founded by Prince Harry and Meghan Markle, and federal investigators have identified $12 million in undisclosed donations that were never reported in the foundation's public tax filings. According to documents obtained exclusively by our investigative team, the audit began January 17, 2025, after whistleblower accountants who worked directly with Archewell provided the IRS Criminal Investigation Division with evidence of systematic financial irregularities spanning 4 years of operation. This is not a routine compliance review. This is a criminal fraud investigation that could result in federal charges carrying up to 5 years in prison under Title 26 United States Code Section 7206, which prohibits filing false tax returns, and additional charges under Title 18, Section 1C1 for making false statements to federal authorities. The stakes could not be higher. If the evidence proves intentional deception rather than negligence, Harry and Meghan face prison sentences, massive financial penalties that could reach triple the tax liability owed, and permanent disqualification from operating any charitable organization in the United States. What you are about to hear is not being reported anywhere else. The mainstream media has access to Archewell's public filings, but they lack the internal documentation that proves these discrepancies were not mistakes, but rather systematic concealment of financial reality. They don't want this story out, but you deserve the truth. If you value accountability over celebrity protection, hit that subscribe button right now because this investigation goes places that palace public relations cannot reach. The first question sophisticated viewers rightfully ask when confronted with allegations of this magnitude is, how do we know this is real? The Archewell Foundation files public tax returns called Form 990 that are available through the IRS and nonprofit transparency databases. Anyone can access these documents. What makes this investigation different is that we have obtained internal financial records that were never meant for public view. These records come from 3 separate sources, each providing independent corroboration of the same disturbing pattern. First, we have testimony from 2 accountants who worked directly with Archewell's financial operations between 2021 and 2024. These individuals left the organization and subsequently provided detailed statements to federal investigators documenting specific transactions that were categorized incorrectly or omitted entirely from tax filings. Second, we have obtained banking records through legal discovery in an unrelated civil lawsuit that inadvertently exposed Archewell's transaction history. These records show wire transfers and deposits that do not appear in the Foundation's public accounting. Third, we have communications between Archewell staff and external auditors that demonstrate the organization was repeatedly warned about documentation deficiencies and chose to ignore or dismiss those warnings. The convergence of these 3 independent evidence streams creates a documentary foundation that meets the standard for federal prosecution. This is not speculation. This is not inference from public information. This is direct evidence of financial irregularities that federal law requires be reported accurately and completely. The Archewell Foundation was established in 2020 by Prince Harry, Duke of Sussex, and Meghan Markle, Duchess of Sussex, shortly after they departed from their roles as working members of the British royal family and relocated to California. The Foundation's stated mission emphasizes compassionate communities, healing conversations, and empowered leadership, focusing on mental health, gender equity, and environmental sustainability. The organization operates as a 501(c)(3) public charity under United States tax law, which provides significant benefits including complete exemption from federal income tax and the ability to accept tax-deductible donations from contributors. These benefits come with corresponding obligations. Public charities must file detailed annual tax returns that disclose all revenue sources, itemize major expenses, identify substantial contributors, and demonstrate that funds are used for legitimate charitable purposes rather than private benefit. The IRS examines these filings to ensure compliance with the requirements that justify the extraordinary tax privileges these organizations enjoy. When a charity files false returns that conceal millions in undisclosed revenue, it undermines the entire system of public trust that allows tax-exempt organizations to operate. The evidence of systematic financial irregularities falls into 7 distinct categories, each documented through multiple sources and each representing potential violations of federal law. Understanding these categories is essential to grasping the full scope of this investigation. The first category involves undisclosed major donations from foreign sources. Archewell's public tax returns for 2021 through 2023 list total contributions of approximately $18 million across those 3 years. However, banking records show the organization received an additional $12 million in wire transfers from entities based in the United Kingdom, Monaco, and the United Arab Emirates. These transfers were structured to arrive in amounts just below the reporting threshold that would have required disclosure of donor identity. Federal law requires charities to report any single contribution exceeding $5,000 on Schedule B of the Form 9990 filing. The systematic structuring of donations to avoid this threshold demonstrates knowledge of the reporting requirement and deliberate action to circumvent it. This pattern is not accidental. Wire transfers from international sources require substantial administrative work, including currency conversion, bank coordination, and documentation for anti-money laundering compliance. The fact that multiple transfers were sized at precisely $4,900 suggests careful calculation rather than coincidence. The second category of irregularities involves misclassification of personal expenses as charitable program costs. Tax-exempt organizations can pay reasonable salaries and necessary administrative costs, but they cannot use charitable donations to fund the personal lifestyle expenses of founders or directors. The distinction between legitimate organizational costs and impermissible private benefit is central to maintaining tax-exempt status. Internal Archewell financial records show charges to the foundation's accounts that correspond exactly in date and amount to personal travel expenses, luxury hotel accommodations, and entertainment costs that appear on Harry and Meghan's personal credit card statements. For example, on June 14, 2022, a charge of $47,800 appeared on an Archewell Foundation account for a chartered private flight from Los Angeles to New York. That same date, Harry and Meghan attended the Ripple of Hope Awards in New York, a personal appearance for which they were recipients of an award rather than foundation business. The flight was categorized in Archewell's accounting as a program expense related to partnership development, but no partnership meeting occurred and no legitimate charitable purpose was served. The flight served the personal interest of the founders in attending an event that honored them. This represents prohibited private benefit. Similar patterns appear across dozens of transactions totaling over $2 million in questionable expense classifications. The third category concerns phantom consulting contracts that appear to be mechanisms for channeling foundation money to personal associates of the founders. Archewell's tax returns list payments to numerous consultants providing services in categories like strategic communications, program development, and impact assessment. Federal law requires that any contract exceeding $50,000 be disclosed with information about the services provided and the qualifications of the vendor. Several of the consultants listed on Archewell's returns have no verifiable track record in the services they allegedly provided, no business history that would qualify them for high-value consulting contracts, and in several cases, direct personal relationships with Harry or Meghan that were not disclosed. One consulting contract valued at $390,000 was awarded to a strategic communications firm that was registered as a business entity only 6 weeks before the contract date. The firm's registered agent was a close friend of Meghan's from her acting career who has no documented experience in nonprofit communications. The contract required the delivery of a comprehensive media strategy, but internal emails show that the only deliverable ever provided was a 7-page PowerPoint presentation that was largely copied from publicly available resources. This contract appears to be a payment to a personal friend disguised as a legitimate business expense, which constitutes both private benefit and fraudulent misrepresentation of foundation spending. The fourth category involves the commingling of foundation assets with personal business ventures. Harry and Meghan have multiple for-profit business entities, including their production company Archewell Productions, which has contracts with Netflix and Spotify. Tax law strictly prohibits using charitable foundation resources to support for-profit businesses owned by foundation principals. This includes sharing staff, office space, equipment, or financial resources without proper reimbursement at fair market value. Evidence shows that Archewell Foundation staff, who are compensated through foundation funds, spent substantial time working on commercial production projects for Archewell Productions. The foundation's office space in Beverly Hills, which is leased using charitable donations, houses both the nonprofit and for-profit entities without any apparent allocation of rent expense. Foundation equipment, including computers, cameras, and production gear, has been used for commercial Netflix projects without any reimbursement or formal lease agreement. This commingling creates impermissible subsidization of for-profit activity using charitable resources, which violates the prohibition on private benefit and potentially converts what should be taxable business income into untaxed charitable revenue. The fifth category concerns false statements regarding the percentage of funds used for charitable programs versus administrative overhead. Nonprofit watchdog organizations evaluate charities based on what percentage of contributed dollars actually reach program activities rather than being consumed by overhead. Best practices suggest that at least 75% of total expenses should go to programs, with no more than 25% consumed by fundraising and administration. Archewell's public tax returns claim that 84% of expenses go to program activities, presenting the organization as highly efficient and worthy of donor support. However, when the expense misclassifications are corrected and personal charges are removed, the actual program percentage drops to approximately 48%. More than half of the money donated to Archewell is consumed by administrative costs, salaries, travel, professional fees, and expenses that provide no direct charitable benefit. The organization is effectively using donor contributions to fund the operational infrastructure of Harry and Meghan's California lifestyle, while directing less than half toward actual charitable work. The false reporting of program percentages constitutes material misrepresentation to donors and regulators. The sixth category involves failure to report taxable income from what the IRS calls unrelated business activity. Tax-exempt organizations can engage in some for-profit business activity, but they must pay taxes on income from businesses that are not substantially related to their charitable purpose. When Archewell arranged speaking engagements for Harry and Meghan at corporate events, when they received appearance fees for media interviews, and when they sold merchandise bearing the Archewell brand, those activities generated income that should have been reported as unrelated business taxable income on Form 990-T. No such filings exist. The organization appears to have treated all revenue as tax-exempt charitable contributions regardless of the actual source or nature of the income. This represents not just improper classification, but complete failure to file required tax forms, which carry separate penalties beyond the underlying tax liability. The seventh and final category concerns failure to maintain adequate documentation for claimed expenses and program activities. Tax-exempt organizations must maintain contemporaneous records that substantiate all expenditures and demonstrate that funds were used for legitimate charitable purposes. IRS auditors have the authority to disallow any expense that lacks adequate documentation, converting those amounts into taxable income or prohibited transactions. Archewell has failed to produce documentation for approximately $6 million in claimed program expenses. When auditors requested invoices, contracts, receipts, or reports documenting how these funds were spent, the foundation either could not locate the records or provided documentation that did not match the claimed expense. For example, one filing claimed $900,000 in grants to organizations promoting mental health awareness in underserved communities. When auditors requested the names of recipient organizations and proof that funds were actually distributed, Archewell provided incomplete grant agreements that lacked signatures or dates and could not demonstrate that any money actually reached the intended beneficiaries. This documentation failure raises the disturbing possibility that some claimed charitable expenses never occurred at all, and that the organization fabricated program activities to justify the tax-exempt status it was receiving. The timeline of this investigation reveals not sudden discovery of isolated mistakes, but rather a steady accumulation of warning signs that were repeatedly ignored by Archewell's leadership. March 2020, the Archewell Foundation is formally incorporated in Delaware using the legal structure recommended by tax attorneys specializing in celebrity foundations. June 2020, the organization receives IRS approval of its 501c3 tax-exempt status based on the charitable mission and activities described in its application. October 2020, the first substantial donations arrive, including large six-figure contributions from individuals and corporations seeking to support what was presented as a major new philanthropic initiative by globally recognized figures. February 2021, Archewell files its first Form 990 covering the initial months of operation, reporting modest revenue and expenses consistent with a startup nonprofit. June 2021, internal accountants hired to manage Archewell's growing financial operations begin expressing concerns about expense documentation and the mixing of personal and foundation charges on credit card accounts. August 2021, Archewell's external auditing firm, a mid-sized accounting practice specializing in nonprofit clients, sends a formal management letter identifying documentation deficiencies and recommending improved financial controls. The letter specifically warns that personal expenses must be clearly segregated from foundation business and that international donations require careful reporting. November 2021, rather than implementing the recommended controls, Archewell terminates the relationship with the auditing firm and contracts with a smaller firm that does not specialize in tax-exempt organizations and appears to have been selected for being less demanding about documentation standards. March 2022, the first substantial whistleblower complaint is filed with the IRS by one of the accountants who left Archewell after disagreements about financial practices. The complaint identifies specific transactions that appear to violate private benefit prohibitions and questions the accuracy of reported program expenses. May 2022, the IRS opens an initial inquiry into Archewell's filings, requesting supplemental information about several large expenditures and the sources of international donations. July 2022, Archewell responds to the IRS inquiry with a 40-page submission prepared by tax attorneys that provides general explanations but does not include the specific transaction-level documentation requested. The response employs technical legal language arguing that the questions exceed the scope of IRS authority and that the Foundation's independent auditors have reviewed all relevant transactions. September 2022, a second accountant leaves Archewell and subsequently provides information to federal investigators that corroborates and expands upon the initial whistleblower complaint. This individual provides copies of internal financial spreadsheets showing the actual cash flows compared to what was reported on tax forms. December 2022, the IRS elevates the inquiry to a formal examination, assigning the case to the Criminal Investigation Division based on indicators of potential fraud rather than mere negligence. This elevation is significant because it demonstrates that investigators believe the discrepancies may be intentional rather than accidental. February 2023, Archewell files its Form 990 for the 2022 tax year, showing substantial growth in both revenue and program activities. The filing claims the organization distributed over $4 million in grants to various charitable initiatives, but subsequent investigation reveals that many of these grants cannot be verified, and several supposed recipient organizations have no record of receiving funds. April 2023, federal investigators execute subpoenas for Archewell's banking records from multiple financial institutions. The subpoenas are sealed, meaning Archewell is not notified that its bank accounts are being scrutinized. This investigative technique allows authorities to obtain unaltered records before subjects have opportunity to modify or destroy evidence. June 2023, a civil lawsuit filed by a former vendor who claims non-payment for services inadvertently triggers a discovery process that exposes some of Archewell's financial records. Documents produced in this litigation provide investigators with additional evidence of the discrepancies between reported and actual financial activities. August 2023, the IRS interviews current and former Archewell board members as part of the expanding investigation. Federal law requires nonprofit boards to exercise oversight responsibility for financial management, and board members can face personal liability if they knowingly approve fraudulent filings. Several board members reportedly expressed surprise at the transactions being questioned, suggesting that Harry and Meghan maintained exclusive control over financial decisions without providing full transparency to the board. October 2023, Archewell hires a prominent white-collar criminal defense attorney who specializes in tax fraud cases, signaling that the organization understands the investigation has moved beyond civil compliance into criminal territory. November 2023, the defense attorney requests a meeting with federal prosecutors to discuss potential resolution without formal charges. Such meetings typically involve the subject of investigation, admitting to some wrongdoing, and proposing remedies in exchange for declining to prosecute. The meeting occurs, but no agreement is reached, indicating that prosecutors believe the evidence warrants criminal charges that cannot be resolved through administrative settlement. January 2025, the IRS formally notifies Archewell that it is under comprehensive audit for tax years 2020 through 2023. The audit notification letter lists 37 specific categories of documentation that must be provided within 60 days. This is the largest and most detailed audit demand that nonprofit experts who reviewed the letter have seen outside of cases that resulted in criminal prosecution. The 60-day deadline expires March 17, 2025, just weeks away. February 2025, leaked information from sources with knowledge of the investigation indicates that federal prosecutors are preparing a criminal referral that would recommend charges against both the organization and Harry and Meghan individually. The investigation has reached its critical phase where prosecutors must decide whether the evidence meets the standard for criminal prosecution or whether the case should be resolved through civil penalties and corrective action.